late Friday, you announced a goodwill write-down. The vintage shareholders, JB, Julius Baer and UBS, the write-down was 410 million Swiss francs. Look, is this the worst passing? Is this a cathartic moment for you as you announce this level of a write-down?
Thanks, Manus. I think in some ways this is about legacy issues coming off the balance sheet. The goodwill's been on there for over a decade. I think it's a large number, but I'm obviously pleased that it doesn't impact our cash. It doesn't impact the valuation of the firm. So in some ways, I think it's a legacy issue, and it's good that it's now off the table.
You've taken to the helm in what couldn't be a more turbulent time. I want to get a sense from you with the teams. How is the business working in this abstract world? Remote working, how are the teams dealing with that? And does your business work efficiently with remote working?
Well, it's certainly COVID has it's all given us a glimpse into the future of work, hasn't it? And I think it's sort of taught us, or certainly reminded us, that asset management in particular is very much a technology business, but it's very much a people business as well. At GAM, we've been lucky, and we've really been able to leverage our technology to move the firm remote. We are still largely working in a remote environment now, but it also reminds you that it's a people business. And so I think in the short term, we've seen an uptick in productivity. I think we've seen communication around the firm improve, and in many ways, the firm coming closer together. We're trying to think sort of strategically, though, about what the long term might look like. I think it's quite attractive at the moment to sort of think that, maybe the world can stay fully remote, and maybe this is a long-term solution. I think my own view on this is that the future will actually be balanced. Maybe what COVID has taught us is it sort of reminded us that technology is really there. It's there to be leveraged. It can make us a lot more flexible in how we work. But I think it is still a people business. I think there's a strong case for that collaboration and connectivity that you get when you're in person with people. And I think there's also a case for maybe not being as rigid as we were in the past, and using technology to allow, flexible working and remote working to be a permanent feature. But as I say, I think it will be more balanced rather than an extreme of one or the other.
In terms of defining the strength, you and I both know that the audience who are watching this, they're going to hang on every word that you say about flows of money. In the press release, you say materially lower net asset outflows, but can you clarify for me the trend? Are you seeing flows come in and the rate of outflow slowing? Just quantify for me what materially lower net asset outflows means.
Sure. So if you think about GAM's recent history over the past few years, the flow story is clearly important, and as you know, it's been a large outflow story for a lot of that time. And that outflow story was driven by two events, some historic events, and then more recently the market pressure in March. Now the outflow profile has certainly normalized. We're seeing materially lower outflows as we sit today. So I'm not too concerned on the outflow side of the business, but what we're trying to always rebuild here is the inflow side. So we are winning new business, and we are seeing the inflows start to normalize. And by normalize, I mean to get back to the historic position that GAM has enjoyed by virtue of its client relationships and long-standing distribution. That inflow side of the business has been slowly rebuilding, and that's certainly not at full strength, but it is rebuilding. It does leave us more susceptible to a market shock like we saw in March, because then the balance between inflow and outflow is that much more out of kilter. But certainly it is an environment that I describe now as stable.